All right, everyone, thank you guys for coming out to the first meeting of the year for the Student Athlete Financial Education Club. We have a great guest speaker here who I'm going to get to in just a little bit. But first, I kind of wanted to go over some general announcements and give a little presentation before we got to our speaker. I really appreciate you guys all coming out. I know it's a Wednesday night. You guys probably have a bunch of other stuff going on. School's getting busy, but I'm really excited to present to you this guest speaker today. So without further ado, I'm going to see. All right. Can you guys see my screen? All right. Everyone see it all right? Perfect. All right. Well, welcome to Safe Club, guys. This is going to be our first meeting, like I just said, and we have a special guest speaker tonight, DJ Tierney, who I'm going to get to in just a little bit. But I wanted to first kick it off by announcing our executive board. This year, we have brought on 4 extra people and then 2 additional team representatives to help out. And we're going to continue adding more and more people as the club grows and grows. But I wanted to announce our Vice President, Garrett Nielsen. And we have our Vice President of Social Media and current Olympian, Alicia Wilson. Vice President of Operations, Trevor Woodward. And VP of Communications, Ava Mann. So congratulations to all you guys. I'm really excited to see where we can take this club this year and hopefully grow it. As I just mentioned, here's our executive board. If anyone is interested in actually applying to other positions, these are currently the only positions we have open. But as the club grows and expands, I know that we're going to get a lot of support this year from the Cameron Institute that's launching. So I think that we can actually grow our club membership significantly this year. And with that happening, we're definitely going to have more, add on more people to have help out. And if anyone's interested in being a team rep, please feel free to reach out to the safe@berkeley email that emailed you guys the link tonight, or feel free to reach out to myself or Garrett Nielsen. I will leave my information in the chat in a little bit later. I know this is a little bit cheesy. This is from last semester. We're going to take this club to the moon, and just maybe this could be us. So what is safe at Berkeley? Well, it's 100% up to you guys. What you want this club to be. I'm interested in taking feedback from all members. This club started because I know all of you guys, student athletes, I wanted to join a financial education club or one of those investing clubs at Berkeley, but they were requiring me to do like 6 hours a week of, team meetings and stuff like that. And that's just something I really couldn't dedicate myself to. As a student athlete, we're already practicing like 20+ hours a week, and it feels like a full-time job already. On top of that, we already have school. So I didn't really want to, put an extra 6 to 10 hours into a club that like I wasn't going to really be able to impact as just a general member. I wasn't even going to be on the board or anything like that. So I wanted to make a safe space for student athletes to go learn about financial education. And that's what I really wanted to come with you guys today. If you guys have any suggestions for the club, feel free to shoot us a DM. Feel free to reach us out on via email or message myself personally. I want to basically build a platform for financial education for student athletes and all students around the Berkeley campus. They always say finance is something that's never taught to us in schools, and it's a huge passion of mine. And I know that all of you guys here, by just showing up, I definitely know that you guys are very interested and in the financial sector and learning about what it holds. So yeah, like I said, anyone has any suggestions, feel free to reach out to us. We want to hear all your voices. So our goals for the club, I'm going to drop our constitution in the chat just in case anyone is interested. But basically our goal as a club is our mission is to bridge the gap between financial gap between students and the working class. We always talk about our parents know the stock market, real estate, etc. How did they learn it? Most of them, it was by trial and error. So I kind of want to have speakers come in and present to you guys on all the learnings of what they've eventually learned years later, all the expertise they have being in the financial sector, etc. And I think that'll really help accelerate our growth as students and more so as sorry, just trying to drop that chat in. That's the Constitution. And leaders of the future is really what I'm getting at. If anyone else wants to hear any more about the Constitution or has any questions about it, feel free to reach out to me again. Our meeting schedule. Garrett, would you like to take this one?
Yeah, thanks, Kyle. Yeah, we're doing bi-weekly. So, we know everybody's busy with their sports and, who knows what else. So we're doing bi-weekly at 5:30 p.m. on Wednesday nights. And then the topics, you want to cover topics, Kyle?
Yeah, so last semester we covered a broad range of topics. It started out with the stock market. We got into real estate a little bit, and then we also hit some mutual funds, I believe. And that was kind of covered a little bit, but I definitely want to go back and touch on it again because lots of stuff happens in the financial sector from day to day. This week, we're actually going to be learning about ETFs, and we have a great speaker who's going to come in and talk to us a little bit about that. But if you guys have any other suggestions on areas of the financial sector that you're at all confused about, feel free to come ask any questions, or feel free to drop any suggestions of like, hey, Kyle, I really wanted to learn about investment banking, like how to get internships in that sector. I'd love to have someone in the investment banking world come in and talk to us and shine some light on that. Up next, paper trading. So this is one of my favorite things that I ever did as far as learning about the stock market. And there is a prize for this at the end of the semester. So at the end of the semester, whoever wins this game will be given a $25 gift card to the place of their choosing, be that Chipotle, Amazon, Starbucks. Last semester, Trevor Woodward, our VP of operations, actually won. And he, I believe, chose $25 of Amazon. But yeah, dropping this link in the chat. It's basically a game where you're given $1 million and you can go invest in the stock market. Now you might be thinking, I know nothing about the stock market. That's great. I hope we can use this club as a safe space to talk about the stock market, investing, etc. Feel free to reach out to me with any questions. And it'll also be a great way for you to go be like, what stock should I go invest in? Maybe I'll go look up something on YouTube or go Google it. That'd be great. Just kind of get your mind thinking about the future of financial education and whatnot. So they're giving $1 million. Winner gets a gift card. Super simple. People like, I kind of went all in on risky bets last semester and it really didn't pay off. But I mean, you can invest in anything like an ETF. Like DJ is going to come talk to us about some great ETFs. I bet he'll shine some light on great investments for you guys later. Up next, team representatives. As I mentioned earlier, if anyone's interested in being a team representative, basically what I want is for you guys to come and make sure have good engagement with all of your team. So if you guys think you can bring out some more members to the club, by all means, feel free to shoot me an email. I'd love for you guys to be on our board and help us out with the day-to-day operations. Our current team representatives are Seb Somerset of the men's swim team and Maya Gressner on beach volleyball. We're really excited to have you guys on board and thank you guys for all you've done so far. Again, disclaimer, this is just a club. None of this is financial advice. So if anything I say or DJ says here tonight, and you go and take it and you spend your life savings on ETFs that ends up, going to zero, like that's not on me. I'm not going to be held liable for that. But I think we're going to actually have some really important topics. I don't think anything that we say tonight's going to be going to zero, but all of this is just speculation and really a learning experience. So if anyone, again, has any questions outside of the spectrum of what we're talking about tonight, feel free to come to more meetings, ask more questions to myself or any of the other board members, or DM us on Instagram. I'm sure we'd be happy to help out. Some tips about the market, if anyone is interested. The best way I started learning about the stock market was by going on YouTube. So I've listed some of my favorite YouTubers right here. There's a great documentary on Netflix actually about the stock market, kind of generally how it works. And just do your own research at the end of the day. Don't listen to what someone on the internet is saying, whether it's like a financial advisor or even one of these YouTubers. Like at the end of the day, no one knows what's going to happen in the stock market. So don't take everyone's word for what's like next stock that's going to $1 million or whatever. Don't take someone's word for that. But now I want to hear from all of you guys. If anyone wants to speak up in the chat or wants to raise their hand, if anyone know anything about ETFs? I see DJ's raising his hand. I know we're going to get to you in just a little bit. And if no one knows anything, that's totally fine. That's what we're going to get to in a little bit.
Doesn't an ETF like follow a commodity or an index usually?
Yes, Reese, that's generally correct. And we're going to get into that right now. Thanks. That's a great segue, Reese. So Garrett, would you like to present a little bit of this, or Alicia?
Yeah, I can. So yeah, ETFs they're exchange traded funds. It's a type of investment fund that tracks an overall share of the market, or basically it's a broad share of the market. So there's multiple companies and multiple types of ETFs you can get into. There's such as tech, healthcare, real estate, and biotech. Those are probably the biggest ones I know. DJ will probably prove me wrong, but those are the biggest ones that I know. And the important point is many investors look to ETFs with the lowest possible turnover. The reason why is because you kind of want to buy an ETF, and if it has high turnover, then it's going to deplete your returns over time. And we all want to get rich, and depleting your funds over time is not what you want. So those are probably the basics about ETFs.
Trevor, I know you helped out with this one. Do you want to take this slide? Maybe. All right.
Do you want to take it?
Yeah, sure. Okay. So as I know that ETFs have numerous tax breaks. However, as Garrett mentioned, if you buy in and sell out of these ETFs, there can be a big penalty to that. And by a penalty, I mean that there's different tax rates on short and long-term capital gains. We're going to, as opposed to just buying generic stocks. And again, if any of this is incorrect, I'm sure DJ will talk about it in just a little bit. But there's various amounts of ETFs, as Reese mentioned earlier. They kind of just track general indexes. So the SPY is the ticker for the index fund that tracks the S&P 500, which covers 500 of America's largest companies. The QQQ index fund is NASDAQ. It tracks the NASDAQ, which is tech heavy. ARC Genomics Revolution is a popular new fund that's going on, and it tracks a lot of, as it says, genomics type stocks and sectors. And then the one that we're going to get into in a little bit today is ticker SCHD. And then the difference between mutual funds and ETFs is that mutual funds are more actively managed, and they're sold at the previous day NAV, or net asset value. So ETFs for college students. As I mentioned earlier, we're going to be playing this stock market game. What should you guys be looking for in an ETF? Well, I'd definitely be looking for low fees, especially if you're investing with your own money. ETFs cost money because they're managed by professional traders. So when you go and invest $1,000, there might be a 1% fee to that. So you could be investing and you'll have a $10 right off the bat taken away from you, because it costs money to buy into these ETFs, as opposed to basically, like, the advantage of buying these ETFs is that they comprised of hundreds of stocks, most likely. And instead of you going and buying 100 different shares of those stocks, you could just go buy this one stock. Buying 100 different shares of various stocks would get pretty expensive, and it would just give you way too much diversification. And then you also want to look for historical growth. One of the suggested funds that our speaker DJ is going to be speaking about today is ticker SCHD, and it is the Charles Schwab U.S. Dividend Fund. And a dividend is a payment from companies to their investors for holding their stock for a certain amount of time. We talked about it in our previous meeting. So if anyone wants to go look into that, feel free to go watch the video from our prior meetings about that. And this is Charles Schwab's fastest ETF, with over $28 billion invested in it, and has a low expense ratio, like I was just talking about, of 0.06%. and it has over 100 companies in it with at least 10 years of consecutive dividends on high scoring metrics. So for a college student, I'd say it's a pretty good ETF. Who knows? Maybe the winner of the stock market game will have this one in their portfolio. We'll see. Garrett, without further ado, here's that hot take poll I know you wanted to do.
Yeah, my hot take poll. It's hot take is a phrase we use in the baseball world where it's kind of like the unpopular view. So with that being said, can ETFs be bad? Would you rather have an ETF or a mutual fund? Let's hear it in the poll. Not sure if you guys know what mutual funds are, but which one is better?
I can't see the poll. I'm not sure if anyone else can.
Yeah, I can't either.
Carl, you're muted as well.
Sorry. If anyone wants to speak in the chat, I'm not seeing a poll either on my end. Sorry about that. If anyone wants to speak or chime in the chat, let us know. ETFs, good, bad, any thoughts? Then the other question we also wanted to pose to you guys was ETFs or mutual funds. I kind of just explained the difference of it a little bit before, that being that mutual funds are more actively managed. So any suggestions?
I feel like mutual funds can be quite reliable, actually. They're usually run by pretty intelligent individuals. Most of all of them know a lot more than we do as college students. It's their profession. So usually I'd trust a mutual fund over an ETF, but both are pretty good ways to manage your money and track the market. So
For sure. And Garrett said in the chat, it definitely depends on your investment strategy. And yeah, if you want to sit back and kind of play very passive, mutual funds might be a good bet for you. All righty, Garrett.
Yeah, so I'm introducing the speaker, DJ Tierney. First off, the man with over 25 years of experience in institutional sales, trading, capital markets, you name it, he's done it. You know, we all want to create a background like this guy. Currently, he's a senior portfolio strategist at Charles Schwab and Company. It's a small little bank. I know a lot of you haven't heard of it, but it's just a tiny little bank. His discerning investment knowledge paired with his behavioral finance insight can provide audiences with a unique perspective on ETFs in today's markets. And his market is very, very difficult to understand. So we're always looking for someone that does understand the market. And so we're ready to hear this guy talk. And, you know, I'm sure this guy could make like your sister's lemonade stand blow up if he wanted to. So I'm excited for him to talk.
The floor is all yours, Mr. Tierney.
Garrett, thank you for that intro. I'm not exactly sure how to blow up a lemonade stand, but I love it. And I wanted to shout out to Kyle for including a visual of Jordan Belfort, as well as a visual from Step Brothers, you know, one of my favorite all-time movies. So what a great group. Actually, I want to just start off with one basic question, because I was kind of jotting down notes for how many sports we have represented in this group. I'm a huge fan of sports in general. I'm a huge fan of UC Berkeley sports. So we've got swimming, we've got baseball. I think I saw beach volleyball. What else? What other sports do we have here? I would like to know who am I talking to? You can unmute and blurt it out if you want. Oh, we got women's water polo. Sweet. Love water polo. Field hockey. Love it. Love it. And here, maybe if I click on the chat, I can see them all. Okay. Right on. Okay. Well, cool. Maybe I covered the rest with my observations. And Kyle, I know you're a backstroker. And by the way, there's a Berkeley alum backstroker 200 yards from me right now. This guy, Ryan Murphy, is doing a swim clinic at our club, at our pool. And if we finish on time, I might go down and see him. He represents you guys really well. He's an ambassador member of our club. He plays golf. I played golf with him last year. Great guy, great outcome in the Olympics too. So what I thought, here's my plan for like the next 15, 20 minutes. I wanted to take you through, Kyle asked me to kind of take you through my narrative, how I ended up working in finance. So I'll take you through, how I went from being your age to working in the financial markets, working in New York on Wall Street for all those years. I want to talk to you a little bit about my kids and their financial education. So I have kids right around your age. I've got a senior in college, second year in college, and I've got 2 high schools, 2 girls in college, 2 boys in high school. So I want to take you through how I approach teaching them about investing and financial literacy. And then I want to share with you some investing principles from Charles Schwab. And by going through those investing principles, I'll hit on ETFs, because ETFs end up being the answer to a lot of investing questions and a lot of investing needs. So I want to illuminate that, kind of in the idea of financial literacy and like what are the 7 things everyone should know when they go to invest from Charles Schwab perspective. So that's the roadmap. And then lastly, I want to open it up for questions. So I'm hoping that, I can't not say a few things that you guys want to understand. So all I would ask is that you be prepared to take some notes, jot down anything I say that you don't understand, jot down anything I say that maybe you just want to ask a question on. And then I'll ask for questions. I might even do a little pop quiz at the end, particularly on the 7 investing principles. I'm going to go through things pretty quickly, but you guys are UC Berkeley undergrads, right? Literally one of the top ranked schools in the world. You all had to achieve great things to get there. So I'm going to throw things at you quickly because I think you're going to get them. And then I'll ask for some questions to get some feedback. So kind of thumbs up. Does that sound like an okay plan? All right. So once upon a time, I was a college student, just like you. I did my undergrad at UCLA before I got smart and went to Berkeley for grad school. And I was on my own financially. Back in the old ages, when school was really cheap, I was able to go financially independent at 19. My parents had 4 kids all in college at the same time. And one day I came home and said, hey, I'm waiting tables. I'm making enough money to pay for my rent and cover the $800 a month, $800 a quarter tuition at UCLA. So I went financially independent, which felt really good, but I was poor. I just lived month to month. And so my first job out of college, I went for a decent paycheck, and I went for work for a company called IBM, which was one of the biggest companies in the world at the time, a very prestigious place to get a job. And they offered me $32,000 a year, which, believe it or not, in 1989 was a lot of money, and enabled me to rent a place on the beach in Manhattan Beach and go buy a used BMW, and supported a pretty fun lifestyle. So it was a good start for a working world for me. I read in the newspaper about investing. I read a book called Liar's Poker by a writer named Michael Lewis, which chronicled his start in working on Wall Street as an institutional bond trader. And my head exploded. I'm like, that's what I want to do. I realized that working at IBM, it dawned on me one day that my boss's boss was renting. I'm like, they've been doing what I'm going to do for the next 10 years, and they're still renting in LA. I'm not sure if this income from this job is actually going to allow me to live a lifestyle and raise a family. So it got me thinking. I knocked on the door of an investment bank, literally through a friend. I met a girl who said, my dad works for Salomon Brothers. And I said, can I talk to your dad? And she arranged a phone interview. And I showed up at his office and said, how do I get a job at Salomon Brothers? And he said, get an MBA from a top 10 business school in the country, and we'll hire you. And so enter UC Berkeley. Remember, I was poor. At the time, I got my MBA at Berkeley. It cost a little under $4,000 a year in fees. And I was able to live at home and get through UC Berkeley MBA without taking any loans. Because the financial literacy was starting to go off in my head at that point, in my late 20s. I was realizing that, okay, so minimizing my outflow and maximizing the inflow will allow me to start to save and invest. So off on my Haas School of Business opened up all the doors. Salomon Brothers hired me. It was the most prestigious bond trading firm in the world at the time. I went to New York. I worked in the World Trade Center of all places. for a couple of years before they sent me to San Francisco. I ended up trading bonds for about 17 years, which was a really interesting, fast-paced way to make a living. It basically set me on a financial foundation where I could raise my 4 kids in a nice community and pay for their college, and enabled me at a relatively, I think, young age, retire from that and take time off and decide what is it I want to do for the rest of my life. So about 5 years ago, I shifted gears from making money to trying to make the world a better place. And so literally I went to work for Schwab because Schwab's got this mission of availing investing to everyone. You know, we bring Wall Street to Main Street. And it's that mission of Schwab of helping people go from just earning paychecks and living paycheck to paycheck to being owners and becoming investors. And so that's my passion. And I serve at Schwab as the portfolio strategist for ETFs. So my job is to be the resident expert, subject matter expert on all things ETFs at Schwab. We are the 5th largest provider of ETFs in the world, with 26 ETFs, one of which is SCHD. But my charter is to make that business grow and help people understand and utilize ETFs. So that is my job in a nutshell. I've been doing, like I said, I've been doing that for just about 5 years. So now let's talk about my kids for a second. So my path in my 20s was spending every penny I had and living a good life. And, you know, I remember saving up for 6 months to take one trip to Europe where I blew all that money and coming back. It was very much, you know, spice to space to space. And the first investment I ever made, I went to some broker where I had to show up in person and I had to write a check. I bought a stock and I checked it in the newspaper for about 6 months and it went up a little bit. I sold it. So I now know buying one stock for a couple of months is actually not investing. That's actually gambling, right? You buy one stock for a short period of time. Nobody knows what any one stock's going to do in a short period of time. Buying 100 different companies for 5 years is investing. So what I did with my kids to teach them about money and help put them on a financial foundation and avoid like some of the turmoil I went through in my 20s is I encouraged them to start working in high school. I worked in high school, but it was, you know, money came in, money went out. The deal I made with my kids, my first daughter she was 14, 15, she was starting to babysit. And I said, I'm going to give you a goal. This summer, you make $1,000. And as a reminder, I pay for your house, I pay for your food, I pay for your cell phone, I pay for everything in your life. So any money you make can go into savings. And I'd like you to, at the end of the summer, have $1,000. You know, she was a go-getter. End of the first summer, she had $1,800. So the next summer, she became a swim coach. By the way, she had a pretty good butterfly on her day. And she was a swim coach and still babysat. The next summer, she made $2,500. At that point, I said, okay, your goal is to go to college with $10,000 of your own money. At that point, we opened up a Schwab account and I introduced her to some ETFs. I created kind of a diversified portfolio for her. And so she added to it each summer of high school. When she left for college, she's the overachiever. She had $12,000. And the idea was, this is your money. This is your financial foundation. It's in your name. And while you're at college, I'm still paying for everything. I got tuition, I got your rent, I got your food, I got your cell phone. But if you get invited to go on a ski trip, I'm not paying for that. You can pay for that. You can make the decision. Do I want to pull money out of my account and pay for my ski trip? And if you do, I would encourage you the next summer to put it back in. And so my daughter has done that. And it is, by the way, it's interesting when she has her own money, observing her, she's gotten really frugal with her own money. And when she graduates from college, she's going to have a pretty tidy sum, which will allow her to have the security deposit for the apartment. If she wants to upgrade her car, if she wants to make a different job choice, she's got this financial buffer. And so that is, you know, that's worked out really well. So I've done that with my second daughter. And now my 2 knucklehead 16-year-old boys just completed their first summer of working with some money, but not to the same success rate as their sisters just yet. So that is going to be the path forward. And that's my start. That's my personal financial literacy path. Charles Schwab, by the way, has a financial literacy program. And we actually announced a big nationwide thing yesterday, MoneyWise America. And so I'll be serving as a volunteer, going to high schools and giving some educational curriculum as a part of their high school experience, teaching them about money, how to invest, how to save, different choices they have. So it's a big passion of mine. So I want to go through the 7 investing principles of Charles Schwab. And as we do that, I'll mention ETFs and how they come into play. So the first investing principle from Charles Schwab is to make a plan, right? So that $10,000 goal I made for my daughter, that was a financial plan. That was, hey, by the time you go to college, you have $10,000. That was the goal and the plan. And that was going to serve as a financial buffer. So you have to have a plan. You know, that's something I didn't have in my 20s, other than the one Europe trip that I saved up to go on. I never really had a plan. And if you don't know where you want to go, it's really hard to get there. So have a plan. Secondly, start saving and investing today. Literally, it's never too early. And so I'm really proud of the fact that I got my kids investing in savings when they were 15, 16, because once you understand about the time value of money and what can happen to $4,000 when it's invested for 30 years, it's incredible. And the biggest components of my wealth are money that I made and invested 15, 20 years ago, where I had the discipline to say, okay, this chunk of money is going here. You know, the 529 plan I started when my daughter was born, that I put money in and watched it do very little for about 5 or 6 years. And then all of a sudden it tripled. So any of the money I put together when she was young tripled by the time she went to college, and it made paying for her college really easy. So start saving and investing today. Literally, there's no minimum amount. You can open up a Charles Schwab account. You can open up, you know, I'm sure there's a lot of other broker dealers out there. You can open up an account with $5 or $10 and start to invest. So the third tenet, 1 was make a plan. 2 was start saving, investing today. 3, build a diversified portfolio. So I'm going to repeating myself a little bit, right? Buying one stock for a short period of time is not investing, it's gambling. You need to have diversification for it to be considered investing, because stocks go up and down. Tomorrow morning, we're going to wake up and there'll be something in the newspaper we don't expect. Things unfold that will impact. It doesn't matter what company. Greatest company in the world, Apple, right? Apple stocks goes down once in a while. Apple stock can go down for 6 months. So it can happen at any given time. So you need to spread it out. And ideally, when we start to build real portfolios, it's US stocks, international stocks, some bonds, some cash, some commodities. I mean, you really mix it up. That's a true diversified portfolio construction. So 3 was build a diversified portfolio. 4, minimize fees and taxes. So let's put taxes off to the side a little bit, because it's not going to be as impactful for you at this point in time, but minimize fees is huge. Okay, so the Schwab tenet, if it's a Schwab ETF, it's going to have among or at the lowest expense ratio in the business. That's the way Schwab does things. We are a discount offer. You know, he pioneered the whole idea of offering stock trading at the lowest price point. Charles Schwab did. So minimizing fees is big, and this is the good news. 25 years ago, if you bought a mutual fund, you paid on average 2.25% fees for that mutual fund, which, you know, may not sound like a lot, but if you invest in a fund with a 2.25% fee and you hold it for 20 years, the fee actually compounds. And so after 20 years, you literally could be giving up 30 or 40% of your investing principal. So the industry has had a really healthy evolution towards lower costs. And by the way, ETFs played a leadership role in that. ETFs came to market and they were so much cheaper than mutual funds that mutual funds have had to react. And so they've lowered the average cost of a mutual fund right now is about 120 basis points, 1.2%. So it's literally been cut in half. Average expense ratio for an ETF, less than 30 basis points. So less than 1/3%. So why do you ever buy an ETF? You buy an ETF because it's cheaper. You can get the same similar exact exposure as a mutual fund, but generally it's cheaper. Cheaper is good. You want to give less of your money in fees. So minimize fees and taxes. That's number 4. Number 5 is build in protection from losses. Well, how do you do that, right? The market's going to go down sometimes. The key is to never have any money in the market that you might need in the short term. So going back to my daughter and her $10,000 portfolio, the day she went to college, that $10,000 portfolio, $7,500 was invested in stocks. $2,500 of it was in cash, because, you know, we wanted to build in the idea that she might want access to the money. And if you want access to your money, you don't want it in the stock market, because you might be forced to sell it the month that stocks are down 15%. So building in a buffer, having a cash sleeve, whether it's literally cash in the bank or in something called a money market fund, which is really stable, you want to have accessible cash for anything that you think you need in the next year or two. If you need it in the next year or two, it really shouldn't be in the stock market. The stock market should be for longer time horizon. So that's it. That was number 5. Number 6 is a slightly more sophisticated concept, but it's called rebalance your portfolio. And the idea there is when you get a diversified portfolio and you have US stocks, international stocks, you might have bonds, after a year, if the stock market doubles, your exposure to stocks will be way up. That would be a chance to say, okay, let's pull some money out of stocks and put it into fixed income. So rebalancing is reallocating among asset classes. So we won't have to go that deep into that today. The last one, number 7, is an important one that I want you all to remember. And it's ignore the noise. Okay, so what do we mean by that? There's a lot of noise, and it used to be newspapers. Now, you guys all have it in your hands all day, right? If you Google stock market, you can get really scared because there'll be 8 articles in there telling you that the stock market's about to go down 50%. There'll be articles on there telling you it's about to double, but the financial media is basically predicated on you clicking on the story and generating advertising revenue. And so there's so much sensationalism out there. There always has been, there always will be. When you invest, tenet number 1 was start with that plan, have your plan, and then don't succumb to short-term developments, right? Don't read an article that says the Fed's about to stop buying bonds and the market's going to go down and worry about it and panic and sell. I'll say this. So part of my profile was on behavioral finance. The whole thing about behavioral finance is human beings are not necessarily wired to be great investors. We're actually set up to be horrible investors because we have the fight or flight instinct. And so, whenever you want to do something with stock investing that's not a part of your written plan, take a deep breath and ask yourself, am I reacting to something? Is this my fight or flight? Am I scared or am I greedy? So I will stop there. Let me just make sure I hit all my points on ETFs. So ETFs are just a really easy way to get broad diversification. Okay, so you guys talked a little bit on your own about ETFs versus mutual funds. So ETFs technically are a kind of a mutual fund. They really are. They're both 1940 Act funds, deemed by the SEC. It's basically a mutual fund that you can buy and sell throughout the day. And that actually makes it a more efficient vehicle. Because people can buy and sell it, you find the true value. The fact that mutual funds don't trade, they trade on that net asset value term that Kyle used. It's kind of artificial. It's kind of like, okay, this is what, if we add up all the assets, that's what the NAV is. And when times of turmoil, when the market's moving around, the mutual fund will just sit there. And so it's not quite as efficient way to get market exposure. They tend to be more expensive. And then lastly, and again, this is a more sophisticated concept, ETFs are what we call tax efficient. And so if you own an ETF, it's very unlikely that it's going to deliver to you something called a capital gain, where with mutual funds, you often will get a capital gain. So you might put $5,000 in a mutual fund, and if you hold it for 5 years, along the way, you'll get something, a tax form called a 1099, where it made money and it paid you the gain, and you might actually have to pay taxes along the way. ETFs are very good at avoiding that. And lastly, okay, ETFs. There's 2,500 US listed ETFs. So what does that mean? That means that you can literally get an ETF on anything. You can buy an ETF that invests in gold. You can buy an ETF that invests in copper, US treasuries, junk bonds, corporate bonds, growth stocks, value stocks, mid-cap stocks, literally any kind of exposure that you want in the risk markets, you can now get in an ETF. And in many, many cases, it tends to be a very efficient way to get that exposure. Because I don't know if any of you have actually gone and tried to buy gold, right? It's kind of hard. You buy the gold. Oh, now I've got a block of gold. What am I going to do with it? I'll put it in a safety deposit box, right? You can literally buy a gold ETF and there's gold behind it and you have the exposure and the fee, will generally be a pretty competitive way to get that exposure. So I'll stop there. I told you I was going to throw a lot at you in a quick period of time. I'm going to ask for if there's any questions. And if I don't get any, I'm going to start asking you guys questions about the 7 principles. So there's your incentive. Did anyone jot down? Did I say anything that confused you? Did I say anything that spurred a question?
I had a question. Can you hear me?
Is that you, Garrett?
Yeah.
Bring it. Go on, buddy.
So I got into the THCX ETF about a year ago,
Mhm.
and because I'm not as smart and or as good looking as Kyle or Reese, the ETF has been doing terrible. What do you think about that ETF? Are you familiar with that one? And what would you say for me personally moving forward?
So I mentioned there's 2,500 ETFs. I know the top 200 pretty well. The ticker you just mentioned is not a top 200 ETF. So I'll turn and ask you, what is it? THC makes me think it might be something specific. Did I get it right?
THCX is the marijuana ETF.
Yeah.
So it's got
Yeah.
the top, I don't know, 10 marijuana. And I
Yeah.
try to be a little risky because we're young and we can be a little risky with some of our ETFs. So that's what I was thinking.
Yeah, I appreciate that, Garrett. I don't have a problem with you investing in an ETF like that. I don't know that ETF, so I can't really give an opinion. But I think I agree that you're young, and while not as diverse as other ETFs that might buy hundreds and hundreds of diverse kinds of stocks, it likely is not just investing in one company. It's probably investing in a whole slew of companies in that space. But I don't have an opinion. But if something goes down, if you like something, and it's a part of your plan, that rebalancing idea would mean that if you buy it as part of your plan and it goes down, and something else goes up, you sell the thing that went up, and you buy more of the thing that went down. That's rebalancing in a nutshell. So it's up to you in your personal circumstance if that's a part of a diversified portfolio and part of your plan. Don't give up just because it went down. But I would encourage you to be diversified among a lot of different sectors, a lot of different industries in the stock market when you're first starting out.
Appreciate it.
I love that you bought an ETF though.
I have a question, especially for I have not invested in any kind of financial market before, and I'm sure there's some freshmen sitting on the call that are probably in a similar situation. So I know this is a very, very broad question, and kind of given those 7 principles you've said, keeping those in account, where would you even start? Would you just go somewhere that you were interested in, or Garrett kind of said he thought that was risky and we were young and things like that. So kind of my mind is like this, but where even to start?
So why don't I take you through what my daughter did? And, I should repeat, by the way, my public relations department had to approve this event. And they told me like 14 times, I can't give like an individual stock recommendation. And this is not advice. I'm just telling you a story about what I did with my daughter. So what I did with my daughter was I started her off with what we call broad exposure. So I won't give you a ticker, but if you look a little bit, you can literally buy an ETF that is the entire US stock market. That'll have 2,500 companies in it. You can buy an ETF that has the top 1,000 companies in it. So I think that's a reasonable place to start as a foundation, right? That's the whole US stock market. You're getting, almost the US business landscape in one ETF. So I like that as a sleeve, but I do think it's also good to complement that with some things where you have interest. So if my daughter is a nutrition major. She's really into, plant-based food, and she thinks that there's going to be a big move towards healthier eating. So she wants to invest in companies in that space. And so I think that's a great idea. But if you have a portfolio, let's make up a number like $5,000, maybe 4,000 of it is in that diversified. And then maybe the $1,000, you can do a satellite where you do things that are interesting to you that keep you engaged. So that might be an approach to consider.
That's great. Thank you so much.
No problem. And then I'll just quickly add on and say, also with my daughters in short order, I did add international stocks as well. There's something called the home bias. There's a behavioral quirk. We're all comfortable investing in our own country. What's interesting is if you go to Finland, the Finns invest in the Finn market. Swedes invest in the Swedish market. Japanese invest in the Japanese market. And so, we just tend to have that home bias. And there's a big, bright, growing world out there. And in fact, a lot of emerging economies are growing quite a bit faster than the United States. And so I would encourage you guys in short order to consider diversified international stocks as a part of a portfolio also. Thank you for the question, Alicia. And Alicia, were you the Olympian?
Yeah.
Congratulations. In what event?
Thank you. 200 IM in swimming.
And what was your trial time?
Like, what do you mean? Like the time I went?
Yeah, exactly. So I swim the 200 IM, 200 yard IM. I think I swim that right now in like a 240. So I just want to know how much faster you are in meters than me.
209.
Yeah, there you go.
Yeah. Yeah.
Awesome.
Thank you.
Any other questions? I think Trent, you have a question?
Can you hear me now? Okay, perfect. So my question is where do you go to buy ETFs? Like, would you just open up an account at Charles Schwab and then do you trade them like stocks, or how do you trade them?
Yeah, so you can buy ETFs at any broker dealer. So Charles Schwab is a great one. You know, we have how many retail accounts do you guys think we have at Charles Schwab? Like, how many individual people do you think have accounts at Charles Schwab? We're only US based, by the way. So in the United States, what would be a big number?
50 million.
50 million. That's pretty good. Actually, Kyle typed in 30 million. Kyle, you're too smart. So it's about 32.5 million as of today. We announced our monthly report. So we have 32.5 million retail accounts. So we're a big one. Now it did double because we bought our biggest competitor, TD Ameritrade, but there are others out there. There's this app-based thing called Robinhood I keep hearing about that's got 8 million new investors in it. Charles Schwab's a great one. We're very low fee to no fee at Schwab, and you can just go online to schwab.com and open one up. But there are others out there. Fidelity, what are some other ones? E-Trade. So, and then to the second part of your question, how do you buy an ETF? It's literally like buying a stock. Yeah, you just need to know the ticker. You put the ticker in and you buy it. Now, see, this is where the expert part comes in. When you buy an ETF, it's best to use what we call a limit order versus a market order. Now, for the amount of money and the kind of ETFs you like to be buying, you're probably just fine putting in a market order. But I'll give you a definition of a limit order versus a market order. And this is probably above where we should be going. But if you can see where it's trading, right, on your phone, everyone's got access to market information. If you see where the ETF is trading, let's say the ETF is trading at $30.30. A limit order says, I will buy that stock for 32 and a number. You put in a number and you say, I'll buy it at that, but no higher. That's a limit order. A market order is you put it in and say, I want to buy it. And then it goes to the exchange, wherever it's trading, you buy it. So in the institutional world, we always say, pick a number, like get a number pretty close to where it's trading, because when the markets zig or zag, you know, the outside event, you put that order in and boom, news hits and the market goes, you know, up or down, it can move around. So consider educating yourself on what a limit order is and then just buy it like a stock. So hopefully that was your answer, and sorry if I complicated.
Yeah, and so like, would you want to like, you just pick a number like similar to where it's at, like a little below or above? Or
yeah, exactly. So if you're buying it, if you want to build in flexibility, if you're buying it and it's like 32.30, you would say, listen, I'll buy it up to 32.35, put a cushion in there because the market might go up in the moment in time. And if you put in a limit order at 32.35, it's not like it's crooked where it's going to fill you at the high number. You will get best execution. So if it trades at 32.28, anything below that where it's trading, you get filled. But it just kind of protects you from like that crazy spike where you put in a market order and all of a sudden, it went to 40, right? It doesn't happen often, but particularly like early morning with ETFs, we like to say, avoid the first 30 minutes of the day and the last 30 minutes of the day, because at the open and the close, you can get some whippy action. So trade inside of those parameters. And if you can pick a dollar amount a little above when you're buying and a little below when you're selling, you can get some flexibility. You'll get executed, but you take away that tail risk.
Thank you so much.
Great questions. I love that you guys are here, by the way. You're a decade ahead of me in my college years. So well done.
Just so you guys know, everybody on the Zoom call, I was looking at the ticker for SCHD, and like 5 years ago it was approximately at like $39-40, and now it's at $76.55. So sounds like DJ knows what he's talking about a little bit. Do you have any idea, insider trading info, to know if this ETF is going to come down a little bit so we can all jump in?
So speaking of Jordan Belfort and inside knowledge, no. I could never share anything outside the public domain on any Schwab ETF stock product ever.
It was worth a try.
Geez, Garrett, I'm gonna have to cut that out of the recording, man. Looks like Reese, you have a question?
Yeah, thanks, Kyle. Definitely not looking for insider information. But thank you for being here, Mr. Tierney. I was a big fan of the seventh point that you made, and ignoring the noise. That's something that we talk about a lot on our team, on the swim team. But I do know that reading is very important to stay on top of information, research, etc. So I was wondering what news sources you recommend personally for us, or ones that you read yourself that we could possibly begin to read now.
Yeah, that's great. Thanks, Reese. So reputable news. So Bloomberg is like the most reliable, I find, source of news on business news. And you know, they're a for-profit company. I have a Bloomberg terminal as a professional investor that I think it costs like $80,000 a year. However, if you have the Bloomberg app, they have their news stories on there. And so I love Bloomberg. I am a dinosaur. I read the Wall Street Journal and a weekend periodical called Barron's that are really, you know, good in-depth coverage of the financial markets. I mean, you guys are on campus actually, so you can go get the Wall Street Journal. You know, I used to, when I read 2 or 3 newspapers a day, I'd read the Financial Times, which is, you know, published out of London, which is great global coverage of markets. Online, Seeking Alpha. There's a lot, you know, you kind of have to sort through it because, you know, Seeking Alpha will publish almost anything, but if you can find a couple of good contributors, people that resonate with you, Seeking Alpha can be a good source of information too.
Thank you.
Thanks, Reese. What do you swim?
What was that? I missed that.
What's your swim event?
I swim the 200 breaststroke, and a little bit of IM as well. So not as good as Alicia though.
Awesome.
Anyone else have any final questions to get to? Looks like we only have a couple minutes left. Don't want to take up much more of Mr. Tierney's time. No, he's got to go hang out with Ryan Murphy.
Go look for him. Well, it was really a pleasure to talk to you all. I really appreciate that you guys have this interest and chose to spend this hour. So well done. I wish you the best of luck. And Kyle knows how to reach me if you guys have questions down the road. We'd love to help out. And go Bears.
Thank you so much. Go Bears.
Go Bears.
Go Bears.
Thank you.
Thank